Welcome back to the Business Year in Review. Debt and deficit issues on both sides of the Atlantic rattled markets and investor sentiment during July.
The month begins with rioting in Greece as the extent of the $150 billion austerity measures become painfully clear. Debt woes continue to weigh throughout the Eurozone, with Portugal and Ireland's credit ratings downgraded to junk, and warning Spain could be in the danger zone as growth slows. But the IMF demonstrates its willingness to lend, releasing more than $4 billion to Greece, and European leaders strike a debt deal worth $212 billion to save the country from bankruptcy. Signs Asia's not immune to global economic uncertainty, with China's PMI slipping to a 2.5-year low. But inflation is still running red hot, with CPI up 6.4% on year. In Australia, the CPI rises 0.9% in the June quarter, sending the Aussie dollar to a record high of just over 110 US cents. RBA Governor Glenn Stevens calls a turnaround in lagging consumer sentiment, with predictions for as many as 3 more rate rises in the coming year. But the RBA doesn't rock the boat, keeping rates on hold at 4.75% for the 7th straight month. However, Westpac then goes out on a limb, becoming the first of the Big Four to predict a 2011 interest rate cut, the bank calling for 100 basis points off the cash rate by the end of 2012. Government policy unsettles the Aussie market as Julia Gillard unveils a $23 a tonne carbon tax to cut coal reliance.
We will use more than 50% of the money paid by big polluters to provide assistance to households in the form of tax cuts and payment increases.
With 500 companies affected under the new tax proposal, the government tries to calm fears with a $12 million ad campaign.
On the equities front, August saw local and global shares nosedive, with Australian stocks marking their biggest one-day drop in more than 2 years. The retail sales fell unexpectedly, the trade surplus narrowed more than forecast, and the rate of unemployment rose to a surprise 5.25%. Growing concerns surrounding Europe's debt situation, and this in turn prompted the Reserve Bank to cut its Australian growth outlook. The Prime Minister and Treasurer are quick to highlight the Australian economy was not immune to negative global events, but was well positioned to deal with the challenges. A decline in manufacturing activity wasn't just a problem for China and the US. Local steelmakers One Steel and BlueScope both announcing massive job cuts due to increased cost pressures on the back of the stronger Aussie dollar, coming after both steelmakers delivered disappointing second-half results. Also on the earnings front, the big banks got the ball rolling, with National Australia Bank posting a 19% rise in annual cash profit to $5.5 billion, and CommBank booking a 12% improvement in cash earnings to $6.8 billion. The strong Aussie dollar saw results from Coca-Cola Amatil and CSL come under pressure, while Telstra's annual profit dropped 17% to $3.25 billion. Wesfarmers was next to report, with the conglomerate delivering a 23% lift in earnings to $1.9 billion. The result demonstrating the benefits of its diversified model, with increased profits from some businesses offsetting weak results from other areas due to the natural disasters and a decline in consumer confidence. It was revealed, though, that the company's Bunnings chain would soon come under pressure, with rival Woolworths announcing plans to launch a competing home improvement chain called Masters to be rolled out progressively over the year.
September started much as the year had, with all eyes on Europe. Its ongoing issues combined with the US credit rating downgrade, so the cost of credit default swaps climbed faster than relative yields on corporate notes. The price discrepancies between bonds and derivatives were pushed to the widest since March 2009. The general market sentiment wasn't helped when Standard & Poor's cut the credit rating of Italy, adding credence to fears of contagion. The rating agency citing weaker growth and a fragile government as reasons the country won't be able to reduce its huge debt load. In company movement, Paladin Energy admitted it had serious inquiries from a range of parties interested in acquiring stakes in its ventures. SAB Miller's $10 billion hostile pursuit of Foster's became even more hostile, with SAB questioning the Australian brewer's statements on its financial performance and net debt, arguing there is no reasonable basis for several forward-looking statements in Foster's fiscal 2011 results presentation. Qantas, seeking to revive unprofitable international operations, is counting on 5 different airline units to win travellers in China, a country 60 times bigger than its home market of Australia. The company announcing plans to form a premium carrier in Southeast Asia and a budget venture in Japan that will give it a base closer to China. The federal court ruled Metcash, Australia's biggest grocery wholesaler, can complete its acquisition of the Franklin's supermarket chain, rejecting the ACCC's request to block the sale. The Treasurer warned Australia isn't immune to the worldwide woes dominating headlines. Wayne Swan cautioning Australia's economy, particularly industries such as manufacturing and retailing, are under pressure as households restrict spending and the high currency curbs returns for exports.
Air travel throughout the nation was brought to a standstill in October after Qantas famously grounded its entire fleet as its battle with the unions intensified. Industrial action had become a common occurrence as a battle raged between the unions and Qantas. It started with the unions, then Qantas upped the ante, causing the government to intervene.
We have decided to ground the Qantas international and domestic fleets immediately.
Joyce said the unions were killing the company slowly and that he had to bring the action to a head, but TWU National Secretary Tony Sheldon thought differently.
The decision, the $5 million man, Alan Joyce, made a decision on Friday once he got his money through and the rest of the board got their pay rise. They were going to crush the hopes of the shareholders.
A decision by Fair Work Australia terminated the industrial action on both sides, but over 60,000 passengers were impacted by the grounding. Athens turned nasty as violent protests against austerity measures took hold of the Greek capital. By October 27, the Eurozone looked to have reached an agreement on Greek debt as private banks and insurers agreed to take a near 50% loss on Greek government bonds after talks in Brussels between Eurozone leaders and the Institute of International Finance. October 31st saw the embattled then Prime Minister George Papandreou calling for a referendum on the bailout without consulting with European leaders. A 4-hour shutdown of the ASX due to a technical fault left the company red-faced. The glitch came as the world looked to the Australian market's reaction to the Euro debt deal, with rival operator Chi-X due to open just 4 days later. Telstra shareholders voted to hand over the company's fixed-line network to the National Broadband Network. The $11 billion deal would see the telco progressively shut down its copper-based network and transfer its customers across to the NBN Co.
It's the race that stops a nation, but many punters were betting the Reserve Bank would also come to the party by cutting rates on Melbourne Cup Day. And cut them they did. A 25 basis point drop, the first movement in the official cash rate in over 12 months. Good news for mortgage holders and the Prime Minister.
This will be a welcome relief for Australian families who are under cost of living pressures.
Qantas had also stopped the nation, but for very different reasons. Early November saw Fair Work Australia end industrial action and force Qantas planes back in the skies, but not before 140,000 passengers were impacted by the grounding, costing the airline around $70 million. On the international front, the EU crisis claimed its first big scalp as Greek Prime Minister George Papandreou was forced to resign. His ousting came after his failed attempt to hold a referendum on the €130 billion aid bailout package, a suggestion not welcomed by either France or Germany. Meanwhile, in the UK, the beleaguered Murdoch family continued to come under pressure for what they did and didn't know about the phone hacking scandal. James Murdoch rejected suggestions he was a mafia boss and said he was sorry about the incident.
To make sure that these things don't happen again, because they are something that I'm very sorry about.
Back at home, Julia Gillard continued her year of delivery with the carbon tax passing the Senate, 36 to 32, and the mining tax soon followed. US President Barack Obama dropped in for a quick visit and said the Labor Party's sudden decision to lift its ban on selling uranium to India was pure coincidence. On the media front, John B. Fairfax exited the business that bears his name, selling his 9.7% stake in Fairfax for $193 million. It wasn't the Christmas retailers had been hoping for. Stores resorting to big pre-Christmas markdowns to entice wary consumers to open their wallets. It was a disappointing end to a tough year for the retail sector, marked by corporate collapses and profit downgrades. Billabong, one of the final casualties, its shares mauled by investors after it warned of a 30% drop in first half earnings.
To provide an indication of how impacted the beginning of December has been, excluding online, our retail like-for-like sales for the first 2 weeks of December are down 18% on the prior year.
Even the usually robust Kathmandu couldn't escape, delivering a profit warning days before Christmas.
There is a trend. We're concerned about it, and to ensure there are no surprises, we wanted to alert the market as soon as possible.
On the market, the festive season started with a rally, the ASX posting a stellar run after central banks around the world took joint action to boost liquidity in the market. But the bears quickly took charge, and the local market couldn't sustain the much-anticipated Christmas rally. Overseas, the Greek tragedy had spiralled into a full-blown sovereign debt crisis that threatened to bring down the common currency. As Europe teetered on the brink of a meltdown, fears were growing that the slowdown would spread to Asia. Manufacturing in China contracting for the first time in 3 years, clear evidence of a cooling in the world's second-largest economy. That sent jitters through our major miners, Rio, BHP and Fortescue all warning of volatility in iron ore prices. At home, the Reserve Bank cut the official cash rate for the second straight month on growing fears of a recession in Europe. But the big banks were reluctant to follow suit despite pressure from the top.
And that's a wrap-up of the year that was. I'm Brooke Corte. Here's wishing you a prosperous and healthy 2012.